Will Merkel go green? The German Chancellor's win makes Angela Merkel the only person to be elected twice during the financial crisis. It may be a personal win, but her favourite party failed to hit the 5% required to gain parliamentary representation. So what does this all mean for Germany? I'm Monica Gibson and I'm joined down the line by Harald-Magnus Andreassen to discuss. Now, most analysts see a so-called grand coalition with the SPD, which finished second, as the most likely option for Miss Merkel's Conservatives. Many Germans would prefer a grand coalition because it would have a broad majority in both houses of parliament, ensuring stability. But how do you see this situation playing out?
Well, I can see from the arguments that are mostly used in Germany that a grand coalition is most likely. Of course, the Liberal Party went out of Bundestag, and the tradition in Germany is for a majority government. And as nobody seems to be liking the Linke, the left-wing party, the best alternative seems to be a coalition between the Conservatives and the Social Democrats.
The electoral campaign was devoid of strong economic policy disagreements. However, issues such as a Eurozone-wide banking union and deposit insurance, in addition to future bailouts, will soon dominate. Given Germany's economic prowess thus far, could their political stalemate hinder the progress of the Eurozone's delicate recovery?
Well, I'm not so sure on that point, because I think Germany has done quite a lot already. If you turn the calendar back a couple of 3 years, I think most people would not have proposed that Germany would have been willing to involve as much as it has already done versus the Eurozone rescue mechanisms. Of course, still a lot of questions remain, specifically concerning the banking union. But even on this point, there's a movement forward. And of course, if the outcome should be a coalition between the Conservatives and the Social Democrats, we know that the Social Democrats has been more in favor of a European cooperation, and that would lead to more, even a bit more willingness from Germany's side to take part in the rebuilding of the Eurozone project.
Despite the perceived confidence in Merkel, there are some sceptics who claim Germany's needs for capital will therefore be ignored by the Chancellor in favour of meeting Europe's economic needs. What do you make of the suggestion that if Germany continues to ignore the fact it's wearing down resources, they could once again be the so-called sick man in as little as 5 to 10 years?
Well, part of the growth model in Germany has been based on, sort of becoming a low-cost producer, at least compared to what Germany used to be, let's say, 10 years ago. And it's right that investment levels have not been that high in Germany in recent years. But it's not that low, and neither the public sector nor the business sector is way off normal investment ratios. I think Germany should increase investments. I think Germany should conduct a more expansionary fiscal policy in a time where its neighbors have to tighten, but I don't think we will see a more contractive or smaller investments in Germany going forward. I think they are on the way up already.
The euro was up some 7% of late, but how do you expect it to continue to perform? Is the market ready for a move on the euro versus the dollar?
I think the recent appreciation of the euro is sufficient. It's mostly due to the lack of exit from the quantitative easing in the U.S. by the Federal Reserve. Even though I'm somewhat optimistic on the growth outlook for Europe, I think the outlook in the U.S. is better, partly because the fiscal policy will not dampen growth in the same extent as it will still do in Europe, and that's an argument in favor of somewhat weaker euro than we have today.
Harald-Magnus, thank you so much for your time and perspectives today. Well, viewers, that's all from me for the moment, but to see how all of this is affecting the single currency, click back to Dukascopy TV for a Euro-themed Targets in Focus. Goodbye for now.